So are we live? We are live, it says. Hi, this is Kenn Renner, real estate expert in the Austin, Texas area. I want to thank you for taking your time to spend a few minutes, maybe 45 minutes. I'm hoping to keep this, talk to you about the Austin real estate market. So I'm excited that you're on here, and I appreciate you taking your time. I know your time is valuable, and that's why I'm going to make sure that you get plenty of information, hopefully for what you're looking for, and also give you some opportunities to connect with me out here in the Austin area to help you build a long-term passive growth through real estate and grow through real estate purchasing and investing. So get started here. My name is Kenn Renner. I'm a real estate broker, real estate expert. I got my first license when I was 19 years old. I'm 56 turning this year. So I've been in the business for over 35 years, 25 of it here in the Austin, Texas market. I also came from California back in the 80s and moved here, got married, moved here, and never looked back. So it's been a great run. And so we'll get started. I'll go ahead and go through the PowerPoint here, and then give an opportunity to connect with me after the presentation. You can go ahead and use the chat box if you'd like to ask any questions that you have. I got my assistant Daniel here that'll be monitoring it as well. So if you have any questions along the way, it's a lot more fun when it's interactive. And so please go ahead and put those questions in there when we're ready to go. So Daniel says stop sharing or hide.
Okay. You can hide that.
Okay. And is my little picture on there as well?
Yeah.
Okay. Just checking out.
Just,
all right. All right. That looks good. Cool. Okay. So here's our presentation is how to invest in turnkey properties with minimal time, effort, and capital. And so like I said, this is our beautiful city here in Austin, Texas. Right now it's 75 degrees. It's a great time of year to be in Austin. And to left there, that's me. And I've been on seen on HGTV's House Hunters. I've been on the show 3 times, and so that's been a lot of fun. There's a little bit of notoriety here. So there's my family, a beautiful family, 3 kids. The oldest turning 24 this month. The youngest is 9, and then my daughter in the middle. She's 20, and she's an up and coming rock star here in the Austin area, live music capital of the world. All right, so just a little bit more about myself, so you know who's talking to you, and then we'll get in more about exactly what you want to learn about. And so, like I said, I've been in business for 35 years, 25 of it here in Austin. I am a real estate investor. I do invest and purchase the same type of product that I sell to our investors, and I'm building a long-term portfolio of passive income. I've closed over $400 million in transactions over that 35 years, and I'm considered one of the top investment brokers in the Central Texas region. So I've been on House Hunters 3 times, and we also support the HOPE cause, which is home ownership possible for everyone. So once again, here's our Lakeway House Hunters show, where we some people from these doctors from Lake Tahoe, California, came out and purchased a house in Lakeway, which is at Lake Travis. So they went from Lake Tahoe to Lake Travis, got a really, really nice house, way more than they were expecting. That's what's so fun about people coming in from California is that they get out here and it's like a kid in a candy store. Our median price is $320,000 right now. So it's really easy not only to purchase a home, and a lot of our clients are people who are planning on relocating. So if you know of anybody who may be moving from the West Coast and interested in learning more about our area, I'd be glad to talk with them. Of course, today we're going to be talking about investments. So let's dive right in. There's my team. Daniel, there, the back there, he's actually sitting beside me. And from the left, that's Kimberly. She's our leasing agent. And then Marissa, she's one of our contract coordinators. The cool guy with the glasses back there is my father-in-law. He's actually my rich dad. He's the patriarch. He's 80 now. He's still rocking and rolling, but he doesn't need to work anymore. Behind that is my operations manager, Andrea, and then my wife is next to her, then Daniel, and then Lisa, and then Sue Barnes is my top real estate agent that works for me. So when you're working with me, you don't just get a broker, you get a team. So that's kind of great. So this is the way Austin, Texas looked probably around 2002, 2003. And I took that from the Hyatt Regency. If you ever want to know where to get a great photo of the city, is to go to the top of the Hyatt Regency, and it shows. But this is what it looks like now. Actually, this isn't even updated with the amount of buildings that are out there. But the same picture, obviously, there it was. and here it is now. And actually about a year ago, we've seen many more towers there. But if we pan to the left, there's the rest of the city. That none of that was there in 2004, and it just keeps on going. Google's building a 35-story tower right in this area here downtown, and then we have what we call the second downtown, which is the Domain, and that's about 15 minutes, 20 minutes with no traffic north of here, north of the downtown area. So we're booming. We're one of the fastest, if not the fastest growing city in the nation. We're the 10th largest in the nation. When I first moved here, we were 17th largest city in the nation. So and the population is scheduled to double by 2050. It's actually gone up 20% in the last 8 years. So people keep moving here, 200 people a day, and they need a place to live. They need a place to rent, and they need a place to buy. And we have affordable housing, but it's getting less and less affordable. And those that get pushed out of the ability to be able to buy, they become tenants, and we become their landlords. All right. It comes with its share of challenges. This is we have traffic that was in the middle of the day. Right after I took those pictures of the city, I took this one on I-35. So we do have our challenges of a growing city, but it's all part of the game. It's actually not nearly as bad as some of the areas that I've traveled in Los Angeles and San Jose as far as traffic is concerned, but it is getting to be a little more difficult. That's why location. We do have some toll roads that are pretty exciting though, that get us around the speed limits, 85 miles an hour. We're the state capital of Texas. So we have all forms of government. And so that's always going to be a stable, steady source of employment and a base. We are the high-tech capital of the South, Silicon Valley of the South, and we've got a whole alphabet soup of different companies, from Google to Amazon to Apple to you name it, Oracle, any of the large tech companies are here. We have one of the most highly educated populations in America. And so, and a lot of high tech people coming not only from other parts of the country like the Bay Area, but also coming from other parts of the world. So India, Bangladesh, Far East, Near East, and we're welcoming them all. It's a very highly educated, and they really concentrate on the education. It's one of the things that we have really good here is good schools. So you don't have to put your kids in private school to get a good education. There's the toll roads I was talking about. 85 miles an hour gets you from point A to point B is the speed limit. So that does help with our traffic congestion. Just give you kind of lifestyle picture. This is Terra Vista Golf Course community. I actually have a listing in this community available right now. And that's what we like to do. It's a beautiful golfing weather today. And maybe I'll head out there after this webinar. This is Avery Ranch, overlooking from the balcony of the clubhouse. This is about 5 minutes from my house. And it's 18-hole championship golf course as well, and a beautiful lake, and 4,400 homes. I sold over 250 homes to homeowners and investors in this one community alone. So once again, once I find a really good area, we have a tendency, our investors have a tendency to really snap everything up. So once again, lifestyle. It's kind of a lot of fun. This is our beaches. We have huge lakes all around us, and this is Lake Travis that the water temperature right now is 82 degrees, crystal clear water, and not crowded, at least on the weekdays. On the weekends, it gets a little crowded. So that's how we enjoy our water sports. And then, of course, it's the live music capital of the world. Actually, right now, as we speak, ACL Live is happening. That's downtown, Austin City Limits Music Festival, and from anywhere from rap and techno on up to even Guns N' Roses and Paul McCartney playing. So a lot of fun. My daughter here, she's an upcoming musician. You can find her, Google Kenn Renner music, and check out her stuff. She's releasing her third EP, third album next month. So I'm real proud of her. All right, so let's talk about what other organizations have been talking about Austin. And this is U.S. News World Report. This was 2017, but we actually just won the 2019. I need to dig that article up, Daniel. 2019 also now placed us as the best place in America to live. So that's coming from a pretty reliable source, U.S. News and World Report. We've been really actually have had. When I started first coming here in the early 1990s, late 80s. It still was talk. The news about Austin was always bullish. It was always on the top of lists of where people wanted to move to. But now they found us, and so we're coming to us at 200 people a day. This just came out last month, September 17th, 2019. This was a Forbes article, and it's a great article. And if you're on the webinar, Daniel, do we have any questions on that?
Not yet.
So if you're on the webinar and you did register, I'll be sending this article out to you as well. So, but this is a great article. In fact, I got it sitting right in front of me, and kind of parrots what I was saying. It says, but let's see, from 2017 to 18, there's been more than 50,000 people have moved to Austin, highest growth rate city in the country for that year, 20% over the last 8 years, and a median price of $315,000. So it says there's been much talk about major companies and that are moving here. Some notable firms with national and regional headquarters in Austin include Facebook, Whole Foods, Dell, Apple, IBM, Oracle, GM, Home Depot, HP, Zoho, and Google is, of course, planning that 35-story tower. Should be open in 2020. And then, and of course, Amazon has similar plans for its second HQ. So going to have a second headquarters here in the Austin area. It's not the same one that they were talking about, all the hype over the years, but there's
here are the top search results.
Constantly, there's my Google chiming in. But Amazon keeps hiring, and I think they're planning on hiring 800 more software engineers by the end of next year. And so I think that brings their count to 1,800 engineers plus with Amazon owns Whole Foods, so it brings their total presence to over 2,500. Now, Apple is the big news, of course, a $1 billion facility, and that facility is going to be done in approximately 2 years, and that'll bring their current their workforce from 6,600 that they currently have here to over 12,000, and planning on adding another 6,000 right away. Mostly software jobs, so we're going to be talking about higher and high paying good jobs. It's only about 15 minutes from where I live, where the new Apple facility is. I have some resources in my YouTube channel and on my website about the Apple campus. $1 billion, 133 acres. Apple will become the largest private employer in the Austin, Texas region. So we're excited about Apple. That's why I go to Santa Clara and San Jose to meet with investors. So keep that in mind. I'll be coming out to Santa Clara, San Jose, San Mateo at the very beginning of November 1st for that weekend. And I plan on doing some private presentations and shaking hands, and might do a public presentation, but I'm looking more to get it into conference rooms with about 7 or 8 like-minded investors who want to learn how to do this, and then I'll take them through. But if you know anybody that wants to come to a presentation live and talk about individual properties, then I'd love to meet up with them, or just have a private conversation when I get out there. Okay, so here's a little wake-up call for the house on the left is a house on Guilford Street. In fact, we actually sold that house. That was the house I'm going to be talking about. Well, I didn't sell it, but the owner's son, who's a realtor, sold that, and he sold the house for $1.4 million. On the right is what you get for $1.4 million in the Central Texas area, and that's on the lake. That's a lakefront house there. So just a kind of little food for thought, difference between a 5-car garage and 4,400 square feet on the lakefront as opposed to a little 3-bedroom, 1-bath, 1-car garage on Guilford Street. So I understand, with the Bay Area, concerned about the fact that it's overpriced and unaffordable, and it's getting really difficult. I understand it's kind of, it's on my heart only because I was born in San Mateo. And so, so I see what's happening with the homeless issues and things like that, and the haves and have-nots. And I deal with our Bay Area clients all over. They don't know the solution, but some of these people just pick up and go, or they'll pick up their investment and go. So they're already talking about signs of the times where they're at the first time in 10 years that you actually have had a slowdown on price growth and actually a flattening out. Actually dropped a little bit, 2.2% back in August. So that's a sign of the times. So I'm going to talk a little bit about my Rich Dad, Poor Dad story. And of course, Robert Kiyosaki's story about Rich Dad, Poor Dad, iconic book that everybody knows about. Actually, I know Sharon Lechter is the CPA that was the co-writer of that book and actually helped him with the story and the numbers and all that. And that's Sharon Lechter, and she's a good friend of mine. And so I get the the real backstory behind the rich dad, poor dad story. But my rich dad, poor dad story is this. My poor dad was a real estate attorney. He did pretty well throughout his life, but he didn't keep his real estate. So during the last few years of his life, he didn't have any money left over. And so I had the privilege of going ahead and taking care of him and paying his rent and taking care of him during his last few years here. But he was a real estate attorney. He did buy a lot of real estate through his life, but he didn't hold on to it. My rich dad is my father-in-law, and that was the guy in the picture, George. He's 80 years old. He is a real estate investor. He always has. He's a realtor. He works on our team. But he showed us how over the years, just buying and holding and letting it grow, and then 1031 exchanging, so you defer taxes, so you don't pay the government. It's undue taxes and what have you. And we're experts at that, on how to do that, how to void or defer taxes over the long haul. And so that's how people get rich. They really just buy, hold the properties and let them grow, and then let the tenants pay the mortgages off. It's not really a rocket scientist. My first home that I remember, my dad purchased in 1963 is $17,000. I just so happened to find that house. This is on Lexington Lane in San Mateo. And it is a 1,300 square foot house as well. This one comes with a 2-car garage. That's kind of nice. But, kind of old, still needs a whole renovation job. Old wood paneling needs probably be, needs some updating for sure. This house sold, according to Zillow, for $1.6 million in January of this year. So that's a house that my dad paid $17,000 for in 1963. So that's 100 times or 1,000 times? That's a huge. I think it's 100 times the value is what it was. So, but anyways, moving forward, my father sold that house, this house, for $25,000. So he thought he was doing pretty good. He bought it for $17,000. A few years later, sold it for $25,000. Tax-free, of course. He had a VA loan on it, so he didn't have any money into it. But he made his money. He thought it was doing good, but should have kept it, right? And then we moved to this house. This is in Palos Verdes, Southern California, and this house is recently appraised for $1.3 million. This house, I think he paid $50,000 or $60,000 for back in the day. This one, Palos Verdes, was quite a far-off suburb, and now it's a very wealthy area. So this is what I was starting to think about, was what if he bought and sold, then we leased for a while, and then he bought and sold. What if he just kept each one of these houses that we lived in growing up? What would that look like if he had 10 houses free and clear by now? And how would that have changed his life? So it goes back to the big whys, and whys for me is what if we kept all the 12 houses that just we lived in, not even investment properties? His net worth would be easily over $10 million, free and clear, and he could have lived easily off that income. Or he could have left a huge legacy for his children, and that's one of the things we talk about is leaving a legacy. And then and that's what happened with my rich dad, George. He's able to keep his real estate, and he'll be able to heir it to his children and his grandchildren with what's called a stepped up basis. So we will get the benefit of not having to pay the taxes on it, capital gains taxes on it, and we also get a depreciation reset. So we won't have to pay a depreciation capture, and we'll get into that later. But the bottom line is that that's a huge way to pass on your worth to the next generation and the next generation. So my rich dad's a buy and hold, exchange, hold, and now he's wealthy. And but I asked him back in 1990, before I got married to his daughter, I said, I'm finally getting some savings here, but I don't want to invest it in California. I was living in California in Orange County at the time. The prices up there were we were at 8% affordability factor, which means only 8% of the people could afford a medium price home. And I knew that studying the markets, that there was going to probably be a change in the market. I didn't want to invest my hard-earned money in a place where I knew that there'd probably be an adjustment down. We'll talk about these cycles of the market and how exactly what happened. From 1990 to 1997, there was a 30 to 40% decrease in values. So smart to go look at other parts of the nation that weren't affected by that particular economy. And so we looked at Arizona, Florida, and then, of course, reading articles I'm getting really interested in the Austin, Texas market. We came out here and took a look around and got so excited. We bought 3 houses the first trip. I bought 3 houses the first day we came out here, the first trip. But because it was such a nice area, I said, this would be a great place to raise a family. So in 93, I got married. I started a mortgage company here and a real estate company, and I've never looked back since. It's been great. Like I said, over $400 million in transactions. Specialize in a couple different niches. One is first-time home buyers. It's the same product our investors are buying. So our investors are buying good old 3-bedroom, 2 baths, 4-bedroom, 2 bath. Typically one or 1 story, but maybe a 2 story, anywhere from 1,400 square feet to 2,000 square feet in below the median price range. So that's kind of my background, and right now I made a mark for myself by observing the counter cycles of the market. And so let's kind of take a look at this chart. It's not 100% accurate, but it's very close to what's actually happened. And so you can see in the Texas line, the values in Texas is the red line. The blue line is California. Now let me see if I got my little tool here, Daniel. Remember that?
Yeah, it should be down there actually.
Oh, here we go. I got a little pen. Okay.
Laser pointer.
Laser pointer. That'll work. Okay. So going back to the 80s, if you look at, there was a boom time in the early 80s because of the oil economy and also the lax laws. And so around the oil economies, there was a huge amount of building and overbuilding, and because of, like I said, that they just built them because they had huge amount of tax breaks. And that all came to a halt around the mid-1980s, and that the values started making a pullback. California was kind of in the doldrums, but back in '86 it started taking off with the aerospace industry was booming. People were moving here, take those jobs from all over the country. And so from 85 to about 91, 92, when I started exploring other parts of the nation, there was a nice run up in values. In the meantime, Texas was still pulling out of its doldrums in value. So this is why I didn't want to invest in in California at the time, is because I saw what was eventually did happen. By 97, we had lost 30% of value. Meantime, .com, Dell Computers, the whole Austin, Texas tech, like I said, .com boom brought us up to about 2000, and a nice stream, about 8 years of good, solid appreciation. And then we had the .com bust. It didn't really drop our values a whole lot, especially the median price or below, but it did definitely put a damper on the market. Meantime, California started pulling out of its doldrums, and lots of real estate transactions. People are pulling their money out of the stock market and putting it into real estate, and drove the values super steep and fast, feeding frenzy for many, many years. 04, 05. I was out in 04, 05 in California telling them eventually this market's going to turn. And certainly we know what happened in 07. That's when the whole mortgage crisis almost sank the entire economy. So what we noticed in the Texas region is that we had a good run up during the same period of time, but then our median price pretty much just leveled out. And in the Bay Area and Southern California, saw as much as 30 to 50% correction in values. So I was telling people in 04, 05, hey, get your money out of California up here, do a 1031 tax deferred exchange so you don't pay taxes, and defer it into an area that's maybe a little more stable so you don't have this big drop, because a lot of people are only putting 5-10% down, and you lose 30-40% in value. You just can't recover, and you end up having to let it go. So I've been watching this phenomenon again. Last 10 years has been a huge run up in the doubling of values, 100% increase in values. And like I said, for the first time, and it was August paper from the San Jose paper, was that there wasn't now first time it's dropped 2.2%, which is not a whole lot, but on a $1.4 million house, 2.2% is about $25,000 in value dropped. Started to make the turn. That's what we can study the real estate markets. So let's get back to some basics here. Why should I invest in real estate? Where should I invest? How? And who should I trust? And so, first of all, investing in real estate has obviously been the way to wealth for a lot of. 85% of the world's wealthy got rich through real estate. So, the only problem or the unfortunate thing is our financial advisors are not geared towards real estate. They're geared towards stocks and bonds and annuities and things and I don't know, there's a few out there, a few good ones out there that like real estate. And they're the ones that I have on my team. So we have financial advisors on our team as well. As everything that you need to have, we have it on our team. We want to make this a turnkey operation for you. So where should I invest? And we just kind of went over that. It's very predictable. Find out where the markets are, where they're up and coming. How should I invest? What should I buy? Should I buy a single family? Should I buy a duplex, fourplex, multifamily? And so, we look at all aspects of the market, but we don't really find a whole lot of duplexes that make sense in this area because they didn't build a whole lot of them. And fourplexes are the same thing, built in the 70s and 80s, are just kind of run down, and they need a lot of work, and there's too much money chasing too few deals. So who should I trust? Really, you want to bet on the jockey, not on the horse. And so that's where I come in, as I've been doing this for so long. I'm an investor myself. I mean, yeah, sure, you can find another real estate agent who'll sell you property somewhere, but I bring that 35 years of experience and wisdom and rolling up my sleeves and getting these investment properties under your belt, starting to build them. One of the things we teach is buy 10 homes in 10 years and pay them off in 20. And you'll be independently wealthy in 18 to 20 years. Values here double about every 15 to 20 years. So the benefits of real estate from the Y side is income. You get someone else pays off that mortgage for you. That's great. Tax benefits. That's one of the biggest for a lot of our high net worth people is the tax benefits and the depreciation. And there's also the economic opportunity zones that are available out there that will also accelerate your tax benefits. And we have them here in the area in called economic opportunity zones. Leverage means you don't have to pay out cash. Now, we do have cash buyers, but you don't have to pay cash. You can pay as little as 20% or even 15% down on an investment property, and you're a huge amount of leverage. So if the value is $200,000 and you put 20% down, that's $40,000, and the value goes up $40,000, which is very possible over the next couple of years. You've now just had 100% return on that investment because of the leverage involved. And then, of course, the thing that everybody looks for is that appreciation, that equity buildup, which is natural over time. And that's why we just say buy and hold. I wish I really had held on to all of my real estate purchases over the years. I buy and sell and bought and sold over 100 homes myself. And then estate dispositions advantages. So that's a real big deal. Like I said, check with your CPA, your accountant, your lawyer, and your financial advisor. As I'm not here to give you any kind of advice that I'm not qualified to give, but I am here to give you good real estate wisdom and good real estate advice. But part of the estate dispositions, like I said, the stepped up basis that we enjoy, our kids will enjoy not having to pay the government capital gains and depreciation recapture that we would have to if we sold our properties before we died. So a great way to pass on wealth to the next generation or generations. All right, so Warren Buffett said this a couple of years ago, along with equity, single-family homes are very attractive investment right now. If held for a long period of time, purchased at low rates, Buffett says houses are even better than stocks. Wow, the guru of stock market says could be even better than stocks. He said he'd buy up a couple 100,000 single-family homes if it were practical to do so. And actually, that there were several hedge funds that did that. Blackstone, American Homes for Rent several years ago, they bought up several 100,000 single-family homes, and now I'm seeing them start to pop back on the market. So I guess they took Warren's advice. So our millennials seem to be really a lot more interested in real estate than we've seen in the past. I think that they're a little skitsy of the stock market. This is a great article that was written, but we find that the new study shows that real estate as an investment is more popular and favored than investing in the stock market among younger U.S. adults. One of the things we love to do is help our young ones get into the real estate game here, hopefully by buying their first home. And if not, then we have a lot of young millennials that are now buying investment properties and they don't even own their home in California because it's too expensive. So some of the things are from bigger pockets here about why people have a block on getting getting started in real estate investing. So first, this is a self-employed business, so you have to be a self-starter. And one of the things you have to do is set a deadline. When do I want my first door, or maybe you've had multiple doors already. So a lot of that it comes with is when are we going to say that I'm going to have that house or those 3 houses. We have one lady who's from Santa Clara. She bought one last year. She has a goal of coming out here. It's worked for her, so she's going to come out here this month and buy two more. So she wants to get to 5 or 7 before she quits her high tech job and lets her husband take care of that, the income side of things, while she builds a passive portfolio of real estate. Or analysis limiting beliefs. I don't want to lose my shirt in real estate. Or listening to wrong voices. Wrong voices produce wrong choices. Unfortunately, I had a fourplex that a Chinese guy was getting older and up in age, and he didn't really have any heirs, so he wanted to give me this fourplex. Of course, there was a loan on it that I had to assume, but there was that's all I had to do was take over the loan. One of my relatives came to town, just happened to be on vacation, and she saw the fourplex and said, "Oh, this one's you don't want to get involved in. It's too much work. It's too much this, too much that. I mean, it's too old, too this, too that." And what ended up happening is that fourplex I could have bought for $100,000 is now worth $600,000. Okay, so don't listen to the wrong voices. Analysis paralysis is another big one. A lot of people that are they freeze up. They get too much information. They get offered too many markets. It's one of the things I don't really like about a lot of these, a lot of the investor clubs is they offer 7 different markets, and it's like, that's nice, but it's confusing, and people get into analysis paralysis because of it, and then don't have a big enough why. I like people who are passionate about real estate, who understand the concept, that really, those that like to watch HGTV or have fix and flip this house or whatever it is, that they really like it, they're gravitated toward. Because if somebody comes to me and says, I want to buy real estate because I heard it's a good way to make money, that's not a big enough why for me. My why is I like to live a financially free lifestyle and pass that financial free lifestyle on to my children and my children's children. Okay, so case study. I'm going to do a podcast on this tomorrow, and this was the house on Guildford Street that Mr. Bill, I'm going to not use his last name for privacy reasons, but we'll call him Mr. Bill. His first name is Bill. Sold this house for $1.4 million. It was actually listed for $1.298. So it actually sold for $140,000 more than list price in a multiple offer situation about 5-6 months ago. He took that one house in 1031 tax deferred exchange into these houses. These are 9 brand new houses, all under warranty, all ranging between 1,400 and 2,000 square feet. They're new construction with a national builder. They're all leased now. It was a very complicated transaction to fit in with the time frames. Lots of challenges along the way, but he did. He took that one 3-bedroom, 1-bath, 1-car garage house and turned it into 9 houses. The income on the San Mateo house is around $3,300 a month. The total gross income on these houses is over $13,000 a month. So more than quadrupled his cash flow play. So this is the kind of stuff that we do. We help people transfer their equity, whether it be out of the stock market, out of their savings, or out of their real estate, and get them to invest in long-term real estate. So once again, just a little review of the counter cycles and how I think it's also time, and I think we're going to continue to see our values here continue to increase as we still see people coming from all over the world to take these jobs. But I do see that there's probably a very good chance that the California market, both Southern and Northern California, is going to take a hit on equity of values, and it's just inevitable. It's what's been going on for the last 50 years. So here's our median home price. This is from the Real Estate Center of Texas A&M University, which has a lot of great information. And this is kind of just shows you the median price really didn't drop even during the 07, 08, 09 debacle. You can see, where's my little guy? There we go, a little laser pointer. So, here was the run up, like I was telling you, from 90 to 2000, and the dot bomb hit, and then it kind of just leveled out. And then it was, it kind of started to boom around 05, 06 a little bit, but then it leveled out. And the same thing's going on here. And right now, we actually still saw an increase. It's now 320 as opposed to what it was just a year ago. So we're continuing to see the growth in our values. What happened was the values, even we had a pretty decent run up of values in 06, 07, 08, when the market turned. What we saw was a drop in volume. So you notice that back in the previous slide, the values really didn't drop. It was just the amount of home sales dropped. So it was just took longer to sell a house. But right now in 2019, we have less than a 3-month supply of houses, and that's been going on since 2013. And I guess with all the people moving here, we can't keep up with the housing, which is great. Drives up prices, but also our rents haven't caught up. And so that's why we want to talk a little bit about some of the submarkets that we look at. That head in the right direction. Population is expected to double by 2050. And so all the indications point up. There's our job growth. That's one of the biggest things that you want to be looking at when you're an investor is what's driving the economy. And right now it's a lot of high tech. So, and then here, like I was saying, there are months of inventory. You can see back in 12-13, it dropped down underneath 3 months supply, and it's been like that for the last 6 years. Average annual appreciation 5.5%, and we can see that has got a little steeper towards the last few years, and that we've seen actually more like 7 to 10% appreciation, just depending on what market you're in. Of course, just reminding the stock market, I think we had an 800-point drop last week, and that's just a little bit too scary for me. I know a lot of people have done well in the stock market. It's not really my thing, because I see these potential huge drops that can happen so quickly. You don't see that necessarily in real estate. That 8% drop was like a 3% drop in one day. So, like I said, I'm not poo-pooing stocks. It's just that it might not be a bad idea to take some of that equity, especially that's grown up in that stock market, and move it into hard assets like real estate. So once again, right direction. This is a little more volatile, but this is pretty consistent. All right. So what do we do? How do we invest in real estate? We find the properties, find the areas, which we're looking at demographics, geographics, employment. We're looking at infrastructure. We're looking at roadways, schools. We have a huge list that we go over as far as the type of properties that we are targeting. So a lot of them are new construction, but we also do resales that are newer, like a few years old. And so we do have resale properties that we sell as well. I've also been doing buying properties myself, putting them under contract myself, and then turning them over to our investors, because right now things are happening so quick. If you don't put it under contract, somebody else is. And so that's why, that's what we've been doing, is I've been tying them up myself and then turning over to our investors. So keep in mind, that's what I'll be sending to you if you give me your email address. And then we help with the acquisition, which is really targeting the property, negotiating with the builder or the seller, and dealing with the helping you with the mortgage. And that's really all you have to do. We have to target the right property, and then you have to put your earnest money up, and then get your mortgage. Everything else we handle. Our whole team handles everything else, including the management. We don't personally do the day-to-day management. We do a lot of the leasing, but we don't do the day-to-day management. We have companies that we manage that do the management for us. And so one of our companies just charges $78 a month to manage our properties. So I'd much rather have somebody who's a professional that does that. Been asked to start a management company for many years, and it's going to be down the road. But right now, we outsource the management, but we definitely we manage those managers, because if they don't do the job and our clients aren't happy, they're not coming back and buying more. And so that's our business model, is to make sure that they're leased with good tenants for long term, we hope. So, and then disposition, when time comes to sell it, I'd like to be your realtor, our team, be able to sell that property, or 1031 tax defer exchange it into more property. That's our job. Okay, this is a nice chart. This is the middle of the market. This is where we target. So if you talk to some investment brokers in other cities that are maybe lower values, low-end properties, I've heard about Ohio and Buffalo and all these some of these other markets, you're dealing in this category right here, where yes, you get good cash flow. It seems to be, high cash flow compared to the prices, high cap rates and things like that. But you also have a huge hassle factor. I mean, I've had my own low end properties, and I'm, people busting into them, or, it was, people didn't take care of it, and they move every year and they ruin the carpet. And so even though it was a low price property, it was a high hassle factor. Appreciation, and when the times are tough, those old beat up properties are hard to sell. And very little appreciation. They're also low liquidity. They're harder to sell. So this is the average properties and median price, which is Austin's around 320. And we're in this spot here where we're talking about the great deals, where you have a combination of good appreciation, you have good liquidity. If I needed to sell it, I can sell it. Cash flow may not be as good, but we don't have to worry about the capital improvements. See, this cash flow doesn't reflect capital improvements. So like I said, every time people move it out, I have to replace the carpet. That eats into my cash flow. It doesn't show on the performance that you get. Liquidity, good, and then cash flow, decent, and then appreciation. What we tell people is stay in this sweet spot, and that's what we do. That's where we invest. So once again, these are the 9 properties that Mr. Bill bought, and he's living happily ever after. And then his son, Bill Jr., is going to enjoy the benefits of that someday when he inherits all these properties. Very, very happy story here. Okay, so I'm going to show you a typical Central Texas investment property. I own 2 houses just like this, called the Roosevelt floor plan, and just a really nice 3-bedroom, 2-bath, 1,650 square foot house. This is what the interior looks like. This happens to have the wood vinyl laminate floors. We like the laminate or tile. Like you see a lot of times our houses have all tile. They come pretty well, equipped here. Granite countertops, stainless steel appliances, higher end cabinets. We make sure they put can lighting in the ceilings, tile floors. Never have to worry about replacing carpet in this house. Another look at the kitchen. How's our how fast is the screens changing at the same time? Good. Okay. And here's a master bath. Good, nice high ceilings, ceiling fans in all the rooms. Bathroom dual vanities. Nice back porch covered. That's what the backyard looks like. Most of our homes are turnkey all the way. They have they have sprinklers and sod. We put that all in so that you don't have to worry about the tenants killing the grass. We almost always do sprinkler and grass in these houses. So here's show me the numbers. Typical pro forma. That's this house that we just saw. It was $189,900. It rented for $1,600, and let's go ahead. Our cap rate's around 6%, so a 6% cap rate, and our cash flow is around between $200 and $300 a month. And you can take this cash flow and put it right back over to this balance here, and you'll pay that property off if you did that in about 17 years. So this house will be worth double, so it should be worth $400,000 in 17 years if the same history repeats itself, and then you'll have a free and clear property if you decide to pay it off early with the positive cash flow. So that's what we teach our clients that have kids that are going to go to college. When they're first born, buy one of these houses, put on a 15-year mortgage. By the time they're out of high school and ready to go to college, the house should be worth double. It should be free and clear. You could sell it, pay the taxes, and then put your kids through all of your kids through college just with that one house. So my team is trusted. We're trusted experts, advisors, and mentors, and that's my acronym for team. And the big word here is trust. A lot of people they'll invest with me sight unseen. They've been referred by a friend or relative that had a good experience. What we really actually would like you to come out and meet our team if you have the ability. I know some people are too busy to do that. About a third of our buyers don't actually come out here and purchase, but we love touring our town and showing you what it's all about. And then really people get excited about it. And that's one of the reasons why we want somebody, if they're really interested, to come out and take a look, because they get excited. They go home and they tell 2 friends and tell 2 friends. So it really helps our business as well. So, all right. So this is what we put together. We hope that one day, if you're not already a millionaire real estate investor, that's our goal, is a multimillionaire real estate investor. And this is you in here. We're in level of being your consultant when it comes to this. We partner with some of our investors, and depending on the deals, and we also have. And then we want to mentor you through it. One of the things that we really enjoy, what I enjoy, is teaching. I've written 6 books, and what I do is I really like to take difficult concepts and bring them down and make them easy. That first house that you buy is your learning curve, and once you get past the first one, it gets easier and easier and easier, just like anything else. And then we have our so that's your inner circle. We want to be part of your inner circle, and then we have your support circle is the other team members. Of course, we are a real estate agent, but we also work with other real estate agents. They know us now, so that if they get a good property that fits our avatar, they'll call us up and say, hey, I'm about this house about ready to hit the market. We also have a really good relationship with the on-site agents at the builders. Same thing. We are able to get things done that other realtors just can't because of our track record with the major builders. Lenders, we have a great pocket of lenders, and I used to be a mortgage lender, so I know all about the lending side of things. We have other investors, and also hard money, private money. So if you need to, if you want to loan money and become a lender as opposed to a real estate owner, you can do that. We have private money funds that you can invest in. And then, of course, attorneys for our 1031 tax deferred exchanges, and for any other real estate legal advice that you need. If you don't have one, we can refer you. Plus you want a true real estate attorney, not just a family practice. Accountants, CPAs, if you need that, we have that. Of course, this is our big one, is the property managers. We're on top of our property managers every day, making sure that they get these properties well taken care of and get them leased. And, our average vacancy time is usually 2 to 3 weeks. This time of year can be a little bit longer. And so, but we spend a ton of money on marketing to be able to get these properties leased and make sure that that they are up and running like a income producing business needs to be. And if you need contractors, that's this whole circle of service circle. We once again handle all the people involved. We own our own properties, so we have all these people in our back pocket. So this is something you don't need to worry about because you're here. I mean, just like I was telling my wife, is that we are real estate investors. We the franchise owner of the McDonald's doesn't go and flip burgers, right? I mean, they're the owner of the franchise, and they let their consultants and their partners put everybody else together as a full team. So that's our role: mentor, coach, and then build relationship. That's what it's all about. Like, that's why I do fly out about once a quarter, sometimes once a month, out to the California coast to meet with people. That's where I'm from. So, and shake hands and talk about the great possibilities out here. We do our research, gather all the market data that you're looking for, and then we put you on tour. We take you on tours. Sometimes we just do stuff by video. We coordinate acquisition of the property. We find the right target properties. We handle everything from contract to close, including your walkthroughs. You don't have to come out here and do a walkthrough. Handle the title, mortgage, coordinating with exchange companies, inspections, and everything. So, and then we'll coordinate with our expert property management. And we also we do leasing as well, because we find that we do, between us and the property managers, we have a better synergistic relationship. So that's the number one thing people say: how long is this property going to stay vacant? And so we know if it stays vacant for more than a couple months, you'll never come back and buy a property from us. So we have a lot of tutorials on how to strategize for leasing and getting a good tenant in there right away. I've got some good podcasts coming up on that as well. Expert guidance during the whole ownership. So the job doesn't just stop right when you get the keys. Your property manager takes over and gets the keys. We keep working with you all the way through, help you with like the property tax protest, dealing with warranty issues, or anything like that. We're still available. We're still part of your team. And then, of course, we talked about that, the disposition in the future. We want to be able to be your realtor when the time is ready for you to sell. All right, so there it is, the best place in America to live, according to U.S. News and World Report. That's my hometown here. Moved here 25 years ago and never looked back. But I do come back and visit our friends back in California, because I tell them all about this, and they get real excited, and they come on out here, and we show them around the city. We show them the fancy barbecue, the live music capital of the world, all the things that makes Austin Austin. So that's my presentation, and I appreciate you taking your time. There's my phone number there at the bottom, 512-423-5626. I'd love to connect with you. Once again, we have this webinar. We're going to do it every Monday through the month of October, and then I'll be coming out in the very big first weekend of November to connect with people and enjoy the nice cool weather in the Bay Area. So if you have any questions, give me a call. Of course, I got my email address. It's not on here. There we go. So ken@buyaustin.com. And of course, you can connect me on all the social media. My number one YouTube channel is KennRenner.tv. KENNRENNER.tv, and you can check out some great resources there. And my new podcast it's going to be released and opened up tomorrow. It will be the 6th podcast I'm doing, and I think it's going to I call it Austin 360 because it's on iTunes now too. So Real Estate 360, which really means we cover everything that has to do with real estate and investing. All right. So I will talk to you soon.
We did just get one question right here at the end. It says from Joanna, you don't believe that the recession is coming and will affect the real estate?
Okay, so as far as recession is concerned, I mean, we've had 10 years of expansion. So of course it can affect real estate anywhere. But when we're talking about being in that affordability factor, and we have people can't afford to buy a $1.4 million 3-bedroom, 1-bath house. So what we found was after 06 boom, you saw the numbers. There were 30,000 homes sold in Austin. And by 07, 08, that had dropped to 20,000 homes. So we saw a volume drop during a major recession meltdown. Saw the volume drop, but we didn't see the prices drop. So I'm just going by history. I don't think the recession that is coming, whenever it comes, because they always do, is going to be nearly as dramatic as it was during the mortgage. I mean, I guess one of the economists that I listened to recently at lunch, he said that it was an apocalypse. It wasn't just a recession. So our town and our properties pretty much weathered through that really well. And even kind of the funny thing, or not the funny thing, was our best clients were people that were moving from another state that had good jobs, good income, but they lost their home in a short sale. You've heard it, you've known it. People, back in the day, they everything was fine about their credit and everything, but they had that 30% drop in value, and so they would rent from us. So that's kind of the nice thing is that we're relatively sheltered here in this market. Compared to other parts of the nation that have seen prices that ran up too far, too fast. So there's a lot of momentum in the market. So I hope that answered your question. Any other questions?
No, that's the only one for now. But one that we always get was where can they watch it afterward? And you usually send an email. Okay,
so if you gave me your email when you register, which you did, I'll send you a replay of this and also send you an onboarding email just for your curiosity of what our typical house looks like. Like I said, it's all about knowledge. Knowledge is power. It's actually more about wisdom because wisdom is the right use of knowledge. And that's what I like to share with my investor clients, because I find an educated investor is a much more less stressed investor, much more comfortable about what they're doing. So once again, I do say I try to recession-proof our properties. Okay, so what happens is little house I just bought for $138,000, renting for $1,300 a month. My payments on it is $750 all in. Got to put 25% down, $750 all in. I can rent that to a Section 8 person if I had to, at least break even. I don't have to feed it. So even if I had to lower my rents, then I would, and it basically becomes a recession-proof property. Now, actually, in the 06, 07, 08, when the market crash hit, I had to sell some of my properties, and I was able to sell them at the value that they were. I wished I kept them, but I'd sold some of them to liquidate some cash, and I didn't lose. I've never lost on any of my Austin investment properties. So I hope to say the same for you. Hope to see you out here sometime soon, or I hope to shake hands in the California area when I come out in November. So once again, Kenn Renner, 512-423-5626. I'll see you at the top. If there's any more questions, you can email me. Have a great day.